about this, and I'm glad to hear that everybody's convinced it takes more study.
What's it up instead of?
I feel a little bit of standing up here because I get more of a sense that I'm talking to everybody rather than just at the table. So if you don't mind, that's to do. But thanks for the invitation. In any event, last week you had this classification hearing for the taxes. Every year you have an opportunity to decide upon various kinds of classifications. Although this is called an exemption, it's really not an exemption. It is one of the choices you have with respect to classifying real property for purposes of taxation. And what it does essentially is to subsidize the taxes paid by those people who have houses with the lowest assessments in town by getting a greater contribution of taxes paid by those people who have the highest tax assessments in town. And it does it by a complicated process, but that's actually the result and the intended result. Whether or not we want to do it here in Westport is going to depend upon what we discover will be the impact of that in Westport, which will depend upon what we see in terms of the distribution of various assessments and how people feel about that kind of social goal. And the way it works is that the assessors will have to find out how many of the residences in Westport are owner-occupied. That these are owner-occupied residences. What it will do then is provide a discount on the assessment for each of these properties, all right? But only the owner-occupied ones. And the way the discount is computed is by taking the total value of all of the assessments on residences, both owner-occupied and not, in Westport. Find out what the average assessment is, and then take a percentage of that, up to 20% of that, and make that into a discount, which is then provided to all the owners of owner-occupied residences in Westport, okay? Everybody follows, there'll be plenty of time for questions, all right? Okay? That number is a positive number, okay? So, take a simple example. If you decided that all of the residences in Westport were assessed a total of $20 million, okay? Take that, and if the number of residences is 100, okay? You divide the 100 into 20 million, and you come up with $20,000 as the average assessment. 20% of that, all right, would be $4,000. That $4,000 figure gets deducted from each assessment. So if your property is worth $3 million, it's much more money than would be possible under this hypothetical. You deduct $4,000 from that $3 million to make the new assessment. If your property
That's
is worth,
owner-occupied.
pardon?
Owner-occupied.
That's right.
Not all.
Only owner-occupied.
Right.
That's right. The discount applies, thank you, Betty, only to owner-occupied properties. The discount does not apply to second homes, does not apply to commercial property, only to owner-occupied property. Okay? So 4,000 from 3 million, but also 4,000 from 10,000. Now look at the enormous impact on that $10,000 assessment, right? It's now down to $6,000, right? So you can see already that the impact on lower assessment properties is much greater percentage-wise than on the more expensive properties, all right?
Close to the light.
Yeah, closer to the microphone?
Just right on.
Yeah. Okay. All right. So This discount then gets applied to all of those properties, all right? Does not get applied to any second homes, to any other properties besides owner-occupied properties. So what you have is those more expensive properties subsidizing the taxes paid by the lower properties, and it can be significant at the lower end, and it's graduated. Even the less expensive properties, as they get more expensive, get less and less of a total deduction from their taxes. The very high assessed properties, right, despite the discount, even if they're owner occupied, they pay more, okay, in order to subsidize, because the total tax levy remains the same. This makes no difference in the amount of tax that the town collects. You don't collect any more tax, you don't collect any less tax. The levy remains the same, right? Yeah,
But it does increase the tax rate.
of course it will increase the
So
tax
that's
rate,
a greater impact.
because the way you set a tax rate is you take the total amount of the tax levy and you divide the total assessment into that to get the tax rate. Now what you've done is you've lowered the total assessment, right? Because you deducted that discount from every one of these owner-occupied properties. That, am I right? Okay, we got the assessors here, right? You've reduced the total assessed value of the town by that discount. When you divide that into the constant, which is the tax levy, the amount of money you're collecting, right? The tax rate goes up. But despite the fact that the rate goes up, because it's being applied to a lower assessment on these lower assessed properties, you're paying less in tax, right? On the higher assessed properties, to make up for that, you're paying more in tax. And second homes and commercial properties get no discount at all. So the impact is even greater on those. So clearly it's a redistribution of tax payments. Now, I proposed this about a year ago, right? And the reason I proposed it, it's interesting, the person who first suggested it to me was one of my neighbors who owns a very expensive second home. And what he said to me was, I think this town needs more revenue. I think this town needs capital exclusions, it needs an override, and if a strong argument against an override is the fact that there are people here in town who can't afford additional taxation, I'm willing to give them a break. Let's lower their tax bill by raising my tax bill, right? I'll pay more as a non-resident, they'll pay less because they have a lower assessed property and it's owner-occupied. So that was my main reason for bringing it up at a time when we were considering the override. But I gotta admit, I'm one of those people who likes the idea of helping out people who have a hard time making ends meet by getting a little bit more from people who can afford to subsidize those people who are having problems. Now, of course, there's not a one-to-one relationship here between low income, right, and low property assessment. There's not a one-to-one relationship between those people who are having difficulty making ends meet and a low property assessment. But maybe there's enough of a connection that it would make a difference in those people's lives and also make a difference in how we look at the need I feel there is in town for additional revenue. Okay? Now you have information that I gave you about what other towns have done. There's a very nice analysis the city of Newton did when it was considering a residential tax exemption. There's an even nicer analysis that the town of Sudbury did, which actually Bob Grillo was responsible for alerting me to that. It's absolutely terrific. It talks about the history of all this. So That's it.
Let me speak to that a little bit. Buzzy wanted me at a hearing that the school was having on the middle school, plans in the middle school, and asked me if I would bring it and co-sponsor it with him this year, and I told him I would. I had thought there was some discussion going on with the assessors. I didn't realize the status of it. But last week, last Thursday, just before we were starting our meeting, I was asked to sign a form that had the second question, do we have a residential exemption? And that, I told Tim at the time, I was going to wait till Monday night before we finish this form, because I don't think we've ever even brought this before the board, and we should be discussing this. I don't want to belabor it tonight. It's not something we're going to be able to resolve tonight, but I do think that we ought to be able to talk to the assessors about this. I see them in the back of the room. Maybe we could schedule something at a later date, but it's another situation where I've been asked many times to look at this, and I thought there was some discussion going on. So when Buzzy mentioned that, and I was going to check off that form, that we hadn't decided to do that, I thought the least we hold the town is at least have on record that we're going to agree to discuss it going forward. Real quickly, Somerset, Barnstable, Waltham, the three places I looked at over the weekend when I got a call from Stephen Harris last Friday, because I wanted to find out a little bit more of what was going on, and it was very difficult and unfair to expect the assessors on a Friday afternoon to get us some data. So I just went to websites, and there are about 13 communities, I'll give you a chance, there are about 13 communities in the state that have a residential exemption tax, and in talking to some of those communities, most of the time it had to do with positioning some of the folks that just didn't have the ability to pay more in real estate tax and voted against normally any kind of increase, whether it was a debt exclusion or an override. But under these circumstances, those communities, those folks were, because they owned their own resident, they had a reduction in taxes. In many cases, we're looking at $1,000 or more in a reduction in taxes for those folks.